Good morning, everybody, and happy Friday. It is February 14th, and we are going to start our prep today for the ES. Were you ready for the rally yesterday? Were you able to time the trades based on the flows coming into the market? Let's do a quick recap and get ready for the last trading day before our extended weekend. First, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So, from our levels that we posted yesterday, on our short videos and in our daily prep. We did make it to our end target at 61.46 quarter to 61.49 from yesterday's prep. And we made that move in Globex right up to 61.46 three quarters. So that was fulfilled in Globex. And as we expected a muted response on PPI, that's what played out. So when we talk about expecting the rally, being able to catch it, we mentioned Thursday that the risk for CPI was a big downside move. And for PPI, downside was possible, but really more of a muted move. It's not as big of a catalyst as CPI. And that's what played out. When PPI came out, we didn't really do much. We made a move up just a little bit towards the peak of Globex and then right back down. And then as we opened in RTH, we held our pivot level from yesterday and our line in the sand right at that 60.74. And we expected the market to begin an insurance buying process because Trump was going to be speaking in the afternoon, and we made our push up as we held our line in the sand in mid-level right until 10:45. And do you pay attention to these flows? Do you know where to look? Are you able to use these to time your market? If you don't, then we'll go into that here later in the video and review how we do this. For today, we do have retail sales as our catalyst at 8:30, but that will be more impactful for the RTY than on the ES. We are coming into a holiday weekend where there will be a little less risk and no other major catalyst slated for the day. So we will rely on other tools to see what is likely. Our systematics have returned with a $3 billion bid today, and that stays as long as we are between 60.89 and 61.81 here. We'll have about $3 billion coming into the market in fresh money. And that's about half the size. We mentioned yesterday that next Thursday is going to be the big day for the supportive bid. Next Thursday, we're looking at about double this size of a bid. So today is a small bid. And really, our last one, we go to neutral to negative on Tuesday and Wednesday next week. And then our model is saying that we have a large bid coming in again on Thursday. And that will be something that we want to pay close attention to. At the same time today, our market makers are above their line in the sand at 60.98, and they don't begin introducing supply in the market until 61.66, 72, 78, and really at 86 is where things change because that's where we lose our bid from our systematics. That's where we would pull a bid out of the market, introduce supply, and then things get a little uh, more rough for the upside. And that's again where market makers are at that max profit and they have all the supply. So now they have to sell it to close out their positions. We are only 14 points away from all-time highs on the cash index. So a move on our futures up to 61.50 today during RTH is very probable. And so if we look back to yesterday, we had at 10:45, one of our educators had laid out that we are not protected at all for Trump speaking at 1 o'clock. So again, if there's not insurance in the market and there's a big catalyst, we can expect insurance to come in, insurance buying, which puts downward pressure into the market. So that was at 10:45, which in the morning session was the high of the morning. In the early morning session, we hit right up to 61.14. And then we sold off all the way down to 60.88. So 25, 26 point sell off. And that was right at 1:30. And we could see that in our models where we didn't have insurance at 11 o'clock. We weren't really protected. And then at 1:30, we were overprotected. And that's where, again, we look for upside being highly favored. Holding our line in the sand tells us market makers are going to push the market, and having all the insurance bought and overbought tells us that the upside now is going to be that pain trade. We don't look just at the pain trade on the weekly COT reports or on our other positioning models. We look at this intraday because people do get themselves off sides. And instead of having to try to watch tick by tick or bar by bar for a bid or an offer in the market, which tape reading is a very beneficial skill, but it can also lead to a lot of emotional stress if you don't know how to use it properly. If you can zoom out and see these flows coming in from a very big picture when you're talking billions of dollars, you just wait for it to be done and then you can catch the next leg of the move. And so we made our move yesterday from our pivot to our upper rotational and or to our upper pivot and then to our rotational high and then all the way up to our end target. And we could see that down move coming. We have the tools to know when that's going to start and confirm when it's starting and then when it's likely finished. Tools such as VWAP or moving averages can definitely help if you're wanting to see if buyers are profiting or sellers are profiting, but it doesn't tell you where the market's going next. Tape reading, again, is a skill that can help, but it doesn't tell you the next likely direction. It can help you to understand what's happening at certain points. And we look at these areas when billions of dollars will have to move because that is what creates our moves on a daily basis. And then if we zoom out on a much larger basis, when we talk tens of billions and in the avenue of trillions of dollars. And that's what we like to do is step back and see the market as a bird's eye view so we don't get lost in the sauce. We use multiple proprietary tools to assess the largest participants, strategies, funds, and firms to trade with them. Because, like a casino, the house always ends up ahead in the end. And the house in this case is the market maker and commercial side of the market. So if you want to level up your trading and learn how to read these markets properly and have access to the proprietary tools to do so, then check out our website for our upcoming courses in March. For today, we will look for rotational price action at 60.89 to 61.39 with our upper targets at 61.73 and 61.88 and our lower targets at 60.59 and 60.42. Have a great day, everybody. Enjoy the holiday weekend, and we will be back on Tuesday.